means that in Kalamazoo, at least, there is a new bank operating in the place of Irwin Union. Is that a fair description?
Yes, the branches of Irwin Union became branches of First Financial Bank, which is actually an Ohio bank, and that's just banking today. You have a lot of banks that branch across state lines, so it's really hard sometimes to tell the players without a scorecard.
Sure, that's right. Well, let's talk first about the things that folks want to know most, and that is, what about my money?
Well, in this transaction, the way the FDIC entered into the agreement with First Financial Bank, all the depositors are fully protected. So whether you had $1 in the bank or $1 million in the bank, there's absolutely nothing for you to worry about. And for the loan customers, First Financial Bank is essentially taking over all the assets. So your loans were taken over by First Financial as well. So for the customers of the bank, they should view this simply as a merger between two banking organizations. Yes, the FDIC facilitated it, but at the end result is basically the same.
I see. So that makes perfect sense. Now, when you say depositors are protected, is that every kind of account?
Yes, all the deposits, checking accounts, savings accounts, CDs, retirement accounts. As long as it was considered a deposit account, it was fully protected in this transaction.
Mm-hmm. We had somebody ask specifically about money market accounts. Apparently they'd read or heard a report that indicated those were not protected, but you're saying they are?
Well, it depends on the type of money market account. There are two kinds of money market accounts. One's protected, one's not.
Okay.
A money market deposit account would be considered a deposit and, as a result, be fully protected. A money market mutual fund would not be insured by the FDIC, as that is a mutual fund and not a deposit. I am not sure which type of accounts that they had at Irwin Union.
Okay. So that's an important distinction, and obviously those folks ought to be having a conversation, I think, with the new bank now.
Yes, or they're in our press release. The FDIC issued a press release, and there's a toll-free number that customers can call if they have questions about this specific transaction. It's unique to this bank.
Okay.
That number is 1-800-528-4893.
All right, and I'll keep that handy here if folks miss that so that we can get that to you. How does this work, David? I mean, the FDIC brokered this agreement with First Financial, but how does the FDIC go about finding a viable institution to pick up where one failed bank leaves off?
We have a list of institutions that have actually contacted us that have expressed an interest in buying banks. So, whenever we get a notification that a bank is going to be closed, which, I think one thing to set straight is that the FDIC actually doesn't close the banks. The chartering authority does. But once we get word that the chartering authority is going to close a bank, we go to our database and we will contact banks to try and find out if there's anybody interested. Depending on the size of the bank, the bigger banks you can't contact as many potential bidders because there are just fewer banks that can acquire bigger ones, because you don't want a sort of a minnow swallowing a tuna fish. So we try and so we try and keep it a bigger bank buying a smaller bank if we can. And so we'll contact those banks before the institution is actually going to be closed, and then we'll solicit bids. We have a secured access website that they will provide them a password. They'll download financial information, and we'll tell them that bids are due on a specific date. And for Irwin, since the bank was closed on Friday, the Tuesday beforehand, bids were due. So at the end of Tuesday, we let the winning bidder know that they won the process. In this case, it was First Financial Bank. And so that way we work with them on Wednesday, Thursday, and all day Friday, making sure that they have everything in place and are ready to be handed the keys on Friday at close of business. And then the next business day it reopens. So we do this in advance, and we do it quietly, so that we can have a smooth, seamless transition. And that's what we did in this case. The branches reopened under their normal hours. Some had Saturday hours, and those reopened on Saturdays. Others didn't reopen until this morning. And all indications from what I've heard, everything over the weekend went according to plan, and there were no hiccups whatsoever.
What has to happen for a bank to travel down the road of dissolution?
Several things. And every state has their own reason as to legally why you can close a bank. Before a bank can actually be closed, the chartering authority has to make sure that, everything, all the I's are dotted and T's are crossed, because, here it is the government coming in, taking away a business from shareholders.
Sure.
So you have to make sure that you have legal footing to stand on. But we've seen a lot of banks that have failed over the past 2 years, really tied to, commercial real estate and the housing slump. With this bank, I think it was more of just a traditional, bad investments. I don't think there were any one particular loan category, such as loans to developer, that really caused the institution to get into financial difficulty. But we've seen that with many of the failures. We've had 94 failures so far this year, and many of them got into trouble because they were lending money to developers to buy a chunk of raw land and then develop that into either housing or office building or something. And but this was just a combination of just no one single category of loans that really caused this bank to fail. And that's unfortunate, because the bank had been around for 138 years.
94 failures, that's, I would presume, a generally excessive number based on what your average usually is.
If you go back, over our 75-year history, we've always had failures during the year, with the exception of a 2-year run in 94 through 96. But to get back into this high of numbers, you'd have to go to 1992, which was the tail end of the savings and loan crisis and the first banking crisis, where we had, I believe it was 179 failures. And then from there, it just dropped off considerably because the economy and the banking industry turned around so quickly then. So we're not near that level. If you go back to 1989, that was the high watermark in our history for failures, when there were 534. So we still have a long way to go to get to that area, and hopefully, we won't get back to those times.
Sure.
So yes, 94 is considerably more than normal for us, but it's nowhere near the record pace that we saw 20 years ago.
Well, we appreciate your time and giving us a little education on the process. David Barr with the FDIC. Thank you.
Okay, thank you.
590 KZO time, 1123. That number again, by the way, unique number for inquiries on the Irwin Union Bank failure is as follows: 1-800-528-4893. 1-800-528-4893.